I think like the core Bitcoin ethos is incredibly important. Like when it comes to Bitcoin treasury companies, I don't think any individual out there should just only hold Bitcoin treasury companies. The only reason Bitcoin treasury companies are worth anything is because of the core fundamental, asset that is Bitcoin.
Mm-hmm.
It's an asset
Yeah.
that you can hold without counterparty risk, without trusted third parties. It's outside the realm of banks and government itself. It's this true sovereign, perfectly scarce monetary tool. And it's valuable because it's outside of the existing system. And obviously, individuals that are out there that want that form of sovereignty should obviously hold actual spot Bitcoin. However, I think Bitcoin treasury companies do provide an interesting product, so to speak, for the traditional world or for individuals that aren't necessarily paying attention as closely as a lot of us have been over the years. And for example, there's kind of two reasons why this is interesting. One is, and Saylor had this slide in one of his recent presentations, but it was basically 97% of institutional capital can't buy Bitcoin, the commodity, directly. They have to buy equity or credit. And so a lot of people managing, trillions and trillions of dollars, might somewhat be interested in Bitcoin, or they might be, curious about Bitcoin. And, if they believe in a truly diversified portfolio, they probably should have at least a small Bitcoin allocation at this point. Yet their investment mandate prevents them from buying actual spot Bitcoin, the commodity.
Mm-hmm.
And so you have all this trapped capital to some extent with, normal, which effectively probably just belongs to normal people that are kind of like blindlessly saving for their future that, hopefully will start paying attention at some point. But for now, they're not paying attention and they don't own much Bitcoin or they don't own any Bitcoin. I think it's important that that trapped institutional capital that belongs to those people can get some exposure to Bitcoin, the asset, and kind of can slowly start benefiting from NGU technology that we all know like Bitcoin actually is. And I think once those portfolio managers understand that and they get an allocation and they see, for a 4-year time period, they see their Bitcoin assets, do a lot better than their traditional assets. And then, individuals that may not be paying attention might be like, oh, wow, my portfolio did really well. Like this Bitcoin thing that's, small little portion of my portfolio did really well. This is kind of interesting. And then they start to go down like the core Bitcoin rabbit hole of like, okay, first I learned about number go up. Now I can learn more about like, okay, what are like the true fundamentals of Bitcoin and like why is it important? And maybe why should I own some of my own, spot Bitcoin for myself in a sovereign manner. And so I think that, Bitcoin treasury companies are really just, entrepreneurs that are meeting that market demand of, I want the number go up technology. I need to buy it via equity or credit. I can't just buy spot Bitcoin directly. And they're filling that need for the market. And that's why we see them trading at a premium. That's why we see the explosion of them occurring. And then the second reason I think that, we're seeing this kind of rush in Bitcoin treasury companies and Wall Street is kind of trying to, use Bitcoin and use it as a great product that they can sell to their investors or their clients is because of what Michael Saylor calls intelligent leverage. And all this really is it's pairing Bitcoin, a long duration asset, right? Like I don't necessarily know what Bitcoin's going to be worth tomorrow, next month, or even next year, but I'm fairly confident over the next 4 years, or especially over the next 10 years, it's probably going to be worth a good bit more than it's worth today, especially in dollar terms. And so Bitcoin is this long duration savings asset, and Bitcoin treasury companies, many of them, are pairing that long duration saving asset with long duration, low interest rate debt, right? So it's like you look back at how you would historically leverage up a Bitcoin position. You would go on something like BitMEX or another crypto futures exchange. You would click 2x long Bitcoin, but that comes with risk. The interest rate is extremely variable. It could get really high at certain times. It's called like the funding rate on BitMEX and some of those other platforms. And then also you have short-term liquidation risk to where if Bitcoin falls 50% in a short period of time and you have a 2x long position, you're liquidated, you lose all your Bitcoin. It's a horrible experience. And so Bitcoin treasury companies pair that long duration, low interest rate debt that's, at a fixed rate, and then buy Bitcoin with it. And so the whole idea is you buy Bitcoin in general, you effectively short the dollar. That's kind of what you're doing when you borrow dollars and buy more Bitcoin. And so if you think that over the long run, that Bitcoin will outperform traditional assets, more specifically, Bitcoin will outperform fixed income assets, then it's reasonable to potentially expect Bitcoin treasury companies that are implementing that strategy to outperform Bitcoin itself, which is relatively interesting for anyone that, thinks Bitcoin is going to go up a lot. And so I think that that's kind of like the market need that Bitcoin treasury companies are kind of fulfilling for the traditional finance system, and then for maybe the more speculative investors that want to take a little bit of extra risk and are comfortable with the extra volatility that may want to outperform holding spot Bitcoin. But at the end of the day, like I mentioned at the start, it's absolutely no replacement for true, real spot Bitcoin. It's that's the only reason why these Bitcoin companies are valuable to begin with, because Bitcoin is this bearer asset that can be held outside the hands of banks and government itself.
Yeah, I love that answer. That's great. I couldn't agree more. Being the director of Bitcoin strategy at Saylor Scientific, and being I don't know, the private world, I guess, for a long time or much of your life, and now you're in the public world of doing these things. How, we have a lot of people that are 35 to 65 years old. Obviously a lot of people have, they tend to be male that watch this channel, probably a lot of Bitcoiners just in general, people that are interested in finance investment, and they're looking at the retirement stuff. So again, that's where, like, similar, a lot of these companies are coming into play. At the same time, how does the average person that might be looking to take a jump and say, hey, I'm telling my financial advisor, I'm out of here, I'm out of my 401k, or I whatever it is. How does the average person build their own strategy, their own, Saylor Scientific Bitcoin treasury for their own family? What would you suggest people are doing when they're looking at the wealthiest companies in the world doing this? Like, what's the signal within all the noise that's going on that the average person should be looking at and kind of, trying to decipher?
Yeah. I think, like I mentioned, like, nothing competes with cold storage Bitcoin. That's a core asset. I think the fact that we're seeing the rise of Bitcoin treasury companies occurring is a great sign for Bitcoin, the asset itself. It shows like the market is going out there and creating securities that normal people or investment managers want to buy, and and Bitcoin treasury companies are providing that service. And the proliferation of them is a sign that it's a product that's in demand, that's good for the market, and could potentially be good for individuals or institutions alike. And so I think, like, when it comes to an individual person, I can't give investment advice, and I also obviously can't say to buy similar stock, but I think it's Bitcoin is the core asset. Bitcoin treasury companies are an interesting thing that is available now on traditional brokerage accounts. And I think your allocation to all of your specific assets, whatever you're trying to allocate to, obviously depends on like your risk preference, your volatility preference, and so much more that you would have to like talk to each individual person with, or an actual financial advisor would have to talk to each individual person with. But yeah, I mean, I think that there's nothing like Bitcoin, and these Bitcoin treasury companies are fascinating, and it shows that to the traditional world that's not really paying attention, is starting to show that Bitcoin is an asset that's here, and it's here to stay, and it's really valuable. It's like that that meme that we've seen plenty of times of like, oh, I thought Bitcoin died. Oh, I thought Bitcoin died again. Oh, actually, no, it just made a new all-time high once again. And it's like over and over and over again, Bitcoin doesn't die. It keeps going higher over a long period of time. And like that's slowly waking people up and helping them realize that, all right, maybe if I was skeptical at first, which almost everyone is initially skeptical of Bitcoin because it's a complicated idea and most people haven't thought about what money is. Well, if I'm skeptical at first, but the market is kind of in a way proving me wrong, potentially, maybe I should start looking into this and at least trying to grasp the other argument that many Bitcoin people have been talking about for quite some time. Try to grasp why that might be right, considering the market is kind of telling me that they actually may be right.
If you're ready for your next piece of education, go click on this video here. However, if you're ready to take action on all the education you have seen, then go to our links right below. Get your hardware wallet from Foundation, $10 off. Go get your seed phrase from that wallet and put it into titanium from Stampseed, 15% off. And then go to the Bitcoin Way, check them out because they are going to be the team to walk you through everything.